Welcome to episode 2 of Patria Talks. Today we'll be talking about the healthcare sector and get insights into the key trends shaping investment opportunities in the sector. I'm Kanika Goela. I'm an investment director based in London, and I'm joined today by Karin Hyland, a partner in our team and a sector expert in healthcare.
Thank you, Kanika. Great to be here today.
So, Karin, why did we start talking about Patria's overall exposure to healthcare?
Of course, so Patria manages over $6 billion of assets in the healthcare sector, and that's really across the healthcare value chain. And it's in our direct investing business in LATAM, credit equities teams there, as well as our global private market solutions business, which is investing in Europe and the US. We've invested from healthcare hospitals, frankly, to pharmacy chains, through to logistics providers, pharmaceutical and medtech players, and even health insurance players. So really covering the full spectrum of the healthcare sector. It's a very important sector for Patria. Our exposure there is growing year on year, and we expect it to be a key sector in years to come.
As we know, every market is quite different in terms of trends and opportunities. So maybe let's focus a bit on Europe and US. And what does the exposure look like there?
So in Europe and the US, it's primarily through our global private market solutions business. In this business, we're making investments through fund commitments to private equity sponsors, through co-investments alongside those sponsors, and through secondary commitments. And we make healthcare investments across all three parts of those strategies. So about 20% of the NAV within the GPMS business is in healthcare assets at the minute. That's nearly $2 billion. And if you look at our direct investment portfolio, we've made over 30 co-investments in the space since 2013, and it's about a quarter of that NAV. So you can see, it's a lot. It's a very important sector for us. We increasingly access our exposure to healthcare through sector specialist managers. And we do think in healthcare, having that sector specialisation is key. Really understanding the challenges in the sector, having operational expertise and networks to leverage to create value is fundamental. So over $27 billion was raised for healthcare funds in 2023.
So the market loves investing in healthcare, a lot of funds being raised with this thematic. We have substantial exposure, 20% in the overall book, 25% in co-investment book. So maybe let's talk about why healthcare is such an attractive sector in PE.
Of course. So, for us, it's our core target, one of our core target sectors, really in large part because of its resilience and the ability to grow through the cycle, which is what we're looking for in most of our investments. So our analysis shows that, even during recessionary periods, you see an increase in healthcare spending. So if you look at recessions between 1980 and 2020, healthcare spending increased by 20% on average during the recessions in that time period. And that resilience, we think, results in strong and stable returns for investors. And again, if you look at the historic analysis, if we took GFC era vintage funds, for example, healthcare focused funds have outperformed non-healthcare focused funds by about 0.9x of a money multiple. And so that resilience and relative outperformance, which we expect to persist because of secular growth trends in healthcare, is really why we're so keen to continue investing there. I'd say if you look at the specific assets in healthcare, at Patria, we are very focused on that resilience, cash generation, assets with strong barriers to entry. And we find all of those characteristics in healthcare assets. So I would say we are deliberately overweight healthcare for that reason.
Yeah, so it comes down to the fundamental characteristics of the investment opportunities, right? So we've talked about historical returns, and the returns have been very strong. Going forward, what do you think are the key trends which will shape healthcare investing in the future?
So, healthcare spend is growing globally year on year. That's really driven by the aging population. It's driven by people living longer. They want to live better, so they have an increased focus and awareness of health and well-being and the importance of looking after oneself. And then we've also got innovation and digitization, which is driving improved diagnosis rates and improved treatment options. So all of that is resulting in increased healthcare spending. And it makes it an attractive place for private investors like ourselves to want to play because there's more capital in the market. If we focus on that aging population point first, so the UN projects that by 2030, the number of people aged over 80 in the world will outnumber the number of infants for the first time. And that's particularly important if we think about the European market where we are today. 9 of the top 10 countries worldwide who have the highest populations of aged over 65 are in Europe. So that ability to serve that aging population, their increased health needs as you get older, you're more likely to need health interventions, is really a key challenge for the healthcare industry, and a key focus for investors like ourselves as to how to serve that. And that aging population will put further pressure on global healthcare systems, which are already struggling under the weight of the post-COVID impacts, inflationary pressures in recent years, and budget constraints driven by payors, particularly public sector payors, having to make cuts. And I think what we've seen is a phenomenon that we've termed medical deserts, which is really underserved pockets of populations who don't have full access to healthcare. I think we saw that in rural areas in the developed world historically, but we're seeing it become more widespread. So, I mean, our analysis shows that in the US, for example, over 80% of the counties in the US don't have sufficient access to healthcare. Closer to home in France, almost half the population have said that they've abandoned planned treatment because they couldn't access the primary care to get that care. So really, it's very clear to us that healthcare systems need to evolve, and at pace, to cope with the challenges of the current market. And we as private investors need to support that evolution.
So significant demand drivers, no question, aging populations, underserved populations, all of that creates significant need. But as a healthcare investor, what are the challenges that you have to be cognizant of when you're evaluating opportunities?
So I think if we look at the challenges of recent years, probably, one of the first ones that we would think about is the supply chain disruption we saw during and post the COVID period, and also the inflationary pressures that we've seen across all sectors in recent years, but they have impacted in healthcare. Despite it being a resilient sector, we have seen some of our business struggle with the impact of inflationary pressures and the ability to pass on the resulting pricing increases required to maybe public payors that they themselves are very budget constrained. Another area we've seen, we saw a lot of money sort of surge into the biotech and pharma industries during COVID. And that has really come off in recent years. And that's had quite wide-ranging knock-on effects, I would say. So not just in those companies directly involved in drug development, but the service companies, the CDMOs and other players who maybe the pharma companies are not outsourcing as much as they did previously. So we're seeing challenges in those areas. And then the other area, which is always a huge factor for healthcare investing, is the impact of regulation, which touches every company that's involved in healthcare. I think we see that as a challenge, but also an opportunity for those firms who are adept at navigating what can be very complicated regulatory frameworks, and also for firms in areas like regulatory consulting or testing, where increased regulation means increased work and increased volumes. And I think that probably rings true for all of these challenges we've discussed, that they're challenges you have to be aware of, but they're also opportunities for the right healthcare investor. And if you're backing the right company and really understand the subsector you're working in, then they're all sources of growth.
Yeah, that's a really interesting point. Challenges can create opportunities, and there are opportunities, but we all need to be mindful of challenges as well when we are underwriting the opportunities. So looking forward, Karin, can we talk about, for Patria, what are the few investment theses and themes that you're actively pursuing in this space?
So, we talked about that need for healthcare systems to evolve at pace, and really that requires innovation. They can't continue to do what they were always doing. And I think one of the areas that we're really seeing that innovation come through is in healthcare technology. And that's an area we're spending a lot of time on as an investment opportunity. And we see opportunities for investment here in companies that are using, it's a buzzword, but using AI, using sort of precision diagnostics, even using robotics to deliver cheaper and more efficient provision of healthcare, and ultimately improving healthcare outcomes for patients. So if I maybe just touch on a few examples in our portfolio that we've been investing in recent years. So one area of focus has been digital health platforms, which are enhancing access to healthcare globally. So in our portfolio, we have a business called Doc Planner, which is known as Dr. Alia in Latin America. And it's a growing global platform which seeks to connect patients with healthcare professionals when they need some sort of intervention, but also provides digital tools for those healthcare professionals to manage their patient workflows, digitize their operations, and allow them to serve those patients more efficiently. And that platform is really helping to improve patient access and ultimately improve healthcare outcomes for the patient population. A second business we've invested in recently is a software-driven medtech business, which is a German company called BrainLab. And what that's doing is using very advanced robotics and AI in surgical settings in hospitals to enable much more precise treatment, and again, improve those patient outcomes. And a third area we've focused on has been around preventative medicine. So what we're seeing, particularly amongst payors with budget constraints, is the need to catch diseases earlier or manage them better at an earlier stage to reduce costly interventions later. So one business we have in our US portfolio is called HealthMap. And what that business does is use data, analytics and advanced technology, as well as clinical expertise, to manage the patient journeys for patients with chronic kidney disease, amongst other illnesses. And really the aim there is to manage the condition better through medication and intervention, diet, that sort of thing, at earlier stages of the disease, which means they don't then hopefully need dialysis and even transplant later in life. So again, that is much more cost efficient from a treatment perspective, from a payor perspective, but ultimately improving those patient outcomes.
I'm sure all of us as healthcare consumers have felt, the advantages of some of the models that you've described, or the need for some of them. I certainly, as a mother of a young child, have looked for, would have loved access to a digital GP, for example, on weekends. They all tend to fall ill on the weekends, don't they? Let's touch on this really interesting point about, we were talking about improved outcomes for patients, lower cost of access, increased access to healthcare, and these, management of chronic conditions. All of these are actually very, very positive outcomes for people. And so, what to me, as someone focused on sustainability in focused investing, is it's a really interesting sector to invest in, to be able to generate value for people, but also financial value for our investors. Is great to see.
Absolutely. Yeah, and at Patria, we're really focused on creating value for clients, but in several different ways, as you say, and really in a sustainable manner, and given you're so focused on sustainability, I know you also really focus on healthcare investing. And I suppose, healthcare investing can often be sustainable and improve patient outcomes. But, healthcare investing does not necessarily lead to sustainability in and of itself. So it'd be great to hear your view on, what is sustainable investing in the healthcare space, and what are you hearing from our investors around their requirements there?
Yeah, sure. Happy to. So definitely what we're hearing from a lot of capital owners and asset allocators is this desire to invest their capital, which generates financial returns, but also generates positive value for people and planet. And healthcare lends itself really well to it. So if you look at surveys of LPs who like to map their investments to sustainable development goals, healthcare ranks right up there, SDG 3, good health and well-being, significantly popular in the private markets. But as you said, not all healthcare investing necessarily is sustainable, because it is a sector which generates positive outcomes for people, but it also has significant ESG risks associated with it. So for us as investors, every time we're evaluating an investment opportunity, we really need to focus not on just the positive handprint of the company, but how conducting its business and its footprint, because some of those activities could have material financial impact on value. So for example, this, as you were pointing out, this sector is heavily regulated. A lot of companies would be heavily regulated. So compliance with regulations, whether it is product safety standards or how you conduct clinical trials or ethical practices, as well as aggressive pricing practices, that actually is a big topic in the sector. All of those need to be looked at. Because it could lead to liabilities, it could lead to a loss of social license to operate. Because if you lose consumer trust, it's really difficult to get that trust back. Or you could lose your entire license to operate, which could be a regulatory license. So those are, for us as healthcare investors, we've discussed this, is a topic to definitely look at and evaluate very carefully when we're looking at an investment. But then taking a step back, just where we hear a lot of our LPs and investors wanting to invest in this sector, what they are asking private markets players for, is to track some of this non-financial outcomes, right? So KPIs that can show you that you are actually delivering that positive, tangible benefit to your stakeholders, and also, so which could be on the handprint side, but also on the footprint side. So KPIs that demonstrate that you are conducting business in an ethical manner, you are following regulation, going to become a very important theme going forward. We are seeing a lot of private markets players, our GPs, and if you look at their reporting, who will report not just financial metrics, the P&L, ROIC, and MOIC, and all the stuff you're used to seeing, but will also report, look, this company has served these many patients. This is how we are calculating the value it's created, how it's treating their patients, what those better outcomes are. This is what they're spending in R&D, etc. And it's great to see, and I think the market will keep moving there because it's the capital owners who are seeking that evidence as well.
Absolutely. And it's an evolution, isn't it? So it's gone from it's healthcare, so it must be good, to actually you have to demonstrate that, prove that, measure and track the improvement in performance over time.
Absolutely.